Back for another live stream. Just waking up. Obviously, I got a full time job. I work at night, so just waking up and seeing how everybody is doing today. Let me see if I can just try to load for everybody to get in. So hopefully everybody's doing good. It's a Monday. Let's see if I can try to get this guy on. Let's see. So hopefully everybody's doing good. Some pretty good news today. I'm just trying to get the TikTok live too. So just bear with me just for one moment. There we go. I think it might have did it. Let's see. There we go. Finally. All right. So pretty big news going on in the world of Tesla and the future of autonomous vehicles happening quick. So let's wait for some people to get in. So it's definitely exciting of what I've read, and obviously I'm just listening to some pump up music, stuff that makes me feel good every time. So definitely waiting for a couple more people to get in so we can kind of get the ball rolling. So, as you can see, it says in the title, Elon Musk confirms Tesla Robotaxi opens to the public next month. Sorry. So that's pretty big, exciting news. The also exciting news is that more than likely we'll get the version of V14 or V13 step higher version that the Robotaxi current level is at right now. That's in the cars in Austin and in the Bay Area. So it's definitely exciting. So let's get to the video over here from Farzad.
Happy Monday. Potentially one of the biggest posts from Elon Musk of all time. Very vague. He replied to a post from a person that was asking, if Robotaxi is so great, why aren't there more people on the network if it's this killer thing? You know, why is it so limited? Elon Musk replied it's going to be opened up to more people next month, assuming the end of September. This has the potential to be the biggest catalyst for Tesla as the company
Agreed.
in its history.
Agreed.
But there's a lot of nuance here and a lot of vagueness that we have to walk through and understand what exactly this means. None of the information in this video is financial or investment advice. The stock was up over 4% today.
Yeah.
At the time of this recording, it's about, 10 a.m. Central, so 11 Eastern.
And
I'm going to go ahead and put the Cybertruck on FSD while we go through this video. I blanked doing that because I was so hyped about these news. And so let's walk through what this could mean. So my initial gut feel, where I am assuming Elon Musk is coming from, is that this is the California rideshare service going wide, not the Austin one. And there is a really big distinction between the two. If you're not familiar, Tesla unveiled a Robotaxi network in late June, so it's been, what the hell is today? August something? I don't even know what day it is. Who cares? Regardless, 7 weeks ago, they launched this thing in Austin. They launched it with a safety rider and nobody in the driver's seat. They, since that point, have expanded the network to geofence, so how big of an area the network covers twice. So it's essentially quadruple in size in that time span. It is pretty close to the geofence of Waymo from a size perspective, a square miles perspective. Waymo is a little bit bigger. They have way more cars. They're open access. They don't have a safety rider. They're farther along in that curve, but they also started like 6, 7, 8 years ago. The Tesla service in California, however, has a safety driver. So they have to have somebody in the driver's seat. And that's because of regulation. So Tesla hasn't yet been approved and doesn't have the necessary data for them to.
Yeah, if you guys don't know the regulation for California, it is safety driver first. After that, then it's a safety monitor in the passenger seat. They collect more data. They give data to the California regulators, and then they can have nobody in the car, just like Waymo.
Operate as a fully self-driving operation in California because they have different standards than Texas. Now, this thing going wide in California means that Tesla would have to 100, 200 cars with a driver, quote unquote a driver, really a supervisor to make sure that the car is doing its thing, but somebody physically in the driver's seat for them to open this up by next month, realistically speaking. So they would have to go through a hiring process of at least 100 people. Realistically, it's 200 people, because for that size of geofence, you're going to need at least 100 cars. There's going to be at least 2 shifts for each car. So you're going to need 2 different people in a car in a day. And then you have the weekend as well. You know, a human can't work 24/7. It's probably closer to 300 people or even 400 people they need to hire to ensure that this service is staffed properly for it to be open to the public. Because once it's open to the public, you're not going to have myself and, I don't know, 50 or 100 other people. I don't even know how many people there are in this area that have access to Robotaxi. But you go from having 100 people potentially hailing a Robotaxi, where in California, it's up to 7 million people. But
now you have to understand that when Elon said in the Q3 earnings, no, Q2 earnings call, he said there could be a couple rough quarters. This is going to probably be the rough quarters, is ramping this guy up. But they do have cash on hand ready to go for this, and he's ready to, you know, kind of take this to another level, which is totally understandable because this is what he said he wanted to do. First would be autonomy, and then afterwards would be Optimus. So he's doing it right. See how it goes.
You walk through that line of logic, okay? That means that Tesla would then have to spend the next 45 days, and perhaps they've already started. I'm sure they already started. But even if it was a 3-month process, onboarding people for your most important asset, your most important line of the business, that, you know, where that person is in charge of ensuring that the car doesn't do something stupid and it makes global news, because anything Tesla going wrong makes global news, right? God forbid Waymo gets into an accident with a fire truck. No one's gonna see that. But, you know, a Tesla tire hits another car and doesn't leave any damage, front page news everywhere, right? It is what it is. That's the nature of the beast. To train that many people in that short of a period, to me, feels risky, right? It feels very risky. If we assume that the safety level of the network is not where it should be for them to go this quickly. On the flip side, if this really means the Austin Robotaxi network going live to the public in Austin, and we also assume that scaling that many people that quickly to oversee your most important asset is a risky thing, then going wide to an open user base where nobody's in the sort of, you know, you're opening it up to everybody, you remove the risk of having somebody in the seat that shouldn't be there by not having somebody at all. Then we're on the cusp, potentially, maybe, of Tesla opening up its Robotaxi network without a safety rider or a safety driver that will go head-to-head with Uber and Waymo in the span of 3 months, which took Waymo years. And it becomes a immediate validation of the approach Tesla has taken to launch a self-driving ride-hailing network. It is it. That is it. It validates the thesis of Tesla's approach of spending the last 6-7 years front-loading the hardware necessary for self-driving vehicles into their mass market product, aka the Model 3 and the Model Y, and absorbing the negative cost impact from that up front, because the sensors and the computer in the car to self-drive cost them, let's say, like $2,000 to put in the car. And this whole time they've put billions and billions of dollars in the AI brain to figure out how to make the car drive. That entire thesis that the company has been made fun of, has been attacked for, anybody like myself and, you know, hundreds of thousands of other people that are shouting from the rooftops, this is happening, and, you know, we're all called lunatics, fanboys, idiots, dick riders, whatever you want to call it. All of those people that saw what was going to happen and they can't help but say it, all that stuff will actually come true. If that is what he means by that. Since the launch of Robotaxi, I've been doing videos every day. Yeah. Essentially, almost. It's there's just been a lot of feels news. Like almost every day, where I actually used Robotaxi as my means of transportation to get into the city, to get into downtown Austin, to work every day, right? For this stuff that I'm building. And I capture videos and I post them online. I've shared my models, all that stuff. So I experience it every day, and the service is great. You know, like for the last couple of weeks since I've been using it, 3 weeks, 4 weeks, like actively using it, I haven't run into any issues. I truly haven't run into any issues. If the safety rider wasn't there, it wouldn't have been a problem, to be completely honest. Now I take a route.
Now, everybody can say, oh, well, these guys, are Tesla bias and everything, but they have done both. They've done Waymo and they have done Robotaxi, and they compare the services for it, right? They compare those services, pricing, where it drops you off safely, the whole experience, etc. And it still comes out to be a dominant factor. And a lot of people are not understanding that at the flip of a switch, Tesla can turn on these cars and just become Robotaxi cars. And people aren't realizing that. And I think it's going to be eye-opening when there's hundreds of these at the Bay Area servicing people. Yeah, you have a safety driver, so it won't feel as real, but it's per regulation. I'm sure that Tesla has enough data over there because they have a Fremont factory, and San Francisco FSD is so good. It's ridiculously good in the city.
That's maybe not the hardest route in the world, but you still see weird stuff, and I've captured all this stuff, right? Like people around the car doing some crazy stuff. So it has working for me. And so maybe in my head, I'm like, okay, it actually going wide is actually becoming real, doesn't feel real, even though I experience it every day, because this has been years in the making, okay? It's a very odd, like weird time where the entire backdrop, the entire thesis, what has been building up for the few years is actually happening, like it actually physically, in the real world, I can touch it and feel it and see it with my eyes and my legs and everything. This truck is driving itself and has been since I purchased it, okay? And Teslas have been driving themselves since FSD with varying degrees of success. As of late, it has been wonderful, okay? The thesis is playing out, but I still don't think it's next month. I still don't think it's next month because Elon said that they're working as hard as possible to get 100 people staffed for the California team.
Yeah, that's going to be a lot.
So my gut tells me that the one that's going wide is California, not Austin. But still then, if you really think about it, that California network is going to be a massive good training ground, a phenomenal training ground for the company to do a ton of validation in a really big geofence. And the cost that Tesla is charging for that network right now today.
I went over this yesterday on this cost, right? Robotaxi is by far the lowest, about 2.5 times compared to Uber, about 6.5 times compared to Waymo, and about 2.5 times compared to Lyft. So you can just see already they're charging a $2.82 miles, so less than $3 a mile. Uber is at 7.30 a mile, Waymo's at 15.80 a mile, and Lyft is at 7.97 a mile. So you can see how crazily ridiculous that this chart looks over next to me, the screen, how that looks very, very tempting, right? Imagine somebody that has to take Uber every day or has, to and from work, to go from, say, an $8 round trip compared to an $18 round trip, or let's say $20 round trip. It makes a huge of a difference for that working man or woman, right? That person is saving a whole bunch of money just to get to and from work, and it's safely. So just to give you guys some perspective on that.
In California, with the safety driver, is less than Uber. Already less than Uber.
Already less than Uber.
And so once they're able to yank that driver out of the seat, all of a sudden, if they can continue to charge those prices in California that are less than Uber, but not, let's say, half the price of Uber like they have in Austin, that means that Tesla's going to make an unbelievable amount of money per mile in that region, because the cost to operate a self-driving vehicle, at Tesla specifically, because of their scale advantage and their technology advantage, the cost per mile is going to be like 60 cents. And if they're charging a little bit less than Uber in California, in that Bay Area, which is probably close to $2.50 per mile, all of a sudden, Tesla's going to make close to $2 per mile in profit, like just straight up profit. It goes to the bottom line. After Tesla accounts for maintenance, insurance, cleaning, charging, miscellaneous expenses, everything. And now that I'm thinking about it, is that the strategy for Tesla, is to actually do that in California, get the service ramped with 100 cars, cover the Bay Area as best as you can, start charging fares, start collecting revenue, and then have it posted on the P&L. It's going to be very small, like 100 cars, realistically speaking, 100 cars, if you assume they make 3.
I like the way Farzad's thinking here. Collecting fares, right? So they're not hemorrhaging cash, right, to pay for safety drivers and give them rides. Paid customers give them rides, right? So it definitely works out best for the bottom line, and now they can put it easily on the spreadsheet for Q3's earnings, right? Now then you can calculate on what potentially it could start doing once it ramps up to other cities and states. You can take that as your business model for it, right? So just it's just it's going to be very exciting, and especially when the numbers come out, you're not going to believe how much this is going to make.
$200 a day in revenue. That's $30,000 a day in revenue. Zero, yeah. So for $30,000 a day in revenue, and then over 30 days, that's $900,000. So almost $1 million a month in revenue. Okay.
And that's
you can very easily take that number and then say, okay, so here's what our costs are. Right now they're ridiculous, but once we yank the safety rider or the driver, and we start trending towards a really good robotaxi to teleoperator ratio, where we only need one person overseeing the network for every 10 cars that are on the road. So with 100 robotaxis will be 10 teleoperators. The cost per mile, that's 60 cents that I mentioned, that's what it will be. It'll be 60 cents per mile, and this is how much revenue is coming in. And so just do the math and look at the margin we're making. The cost of building the car, the cost of building the actual robotaxi, which my guess for the Model Y is going to be somewhere around $30,000 to $35,000, the revenue we'll make from the service, so the profit we'll make from the service at California prices of $2 per mile, will take about 15,000 miles of driving to pay for that car. And 15,000 miles of driving, it's probably like half the year. And so your return on invested capital, your ROI, your return on investment is 6 months. And then everything after the 6 months, it's just gravy. It just goes to the bottom line. It just, whoop. I mean, it technically goes to the bottom line from the beginning because your cars are, it's CapEx or.
See, now this is where it gets kind of dicey, right? Because there could be one of two things that's happening. They can sell it to the consumer, such as myself, or they can keep that car for themselves and throw it on the network in the Bay Area for now, or whatever city that there may be, and start making hand over fist money, really. So instead of making, say, $5,000, $6,000, $7,000 in profit to a customer, and that customer doesn't put it on the robotaxi network and doesn't have the foresight to do that, then it's just wasted money. So what is incentivizing Tesla to not tell them to say, hey, we're just going to, whatever cars are not being sold or whatever leases are coming back, we're going to put them on the network. So just be prepared that you might not even get a lease anymore, and you might not even buy a car maybe next year, because they might just throw it on the robotaxi network. I just don't know the plan. We just got to keep listening for more news and the Q3 earnings call to kind of get more guidance on that.
It's sort of in an asset line. It's in the balance sheet. Doesn't hit your P&L anyway. This is stupid kid. But that's how it works. Okay. So if that's the idea, then that's a very smart way of showing profitability to the investor base.
Yes.
But if they're doing it in Austin, that takes it to a whole different level, because you're not just showcasing like what's going to happen. You're showcasing what has happened, and what has happened is an absolute disruption to the transportation model in the United States, where the cost per mile to get from point A to point B is 60 cents, which is less than the average cost per mile of owning and operating your own vehicle, which is about 70 cents to 80 cents in the United States for a new or lightly used car. If you're going for a straight beater, it's going to be below that, but you know, you're stuck with a straight beater, like a 1992 Honda Accord or something, which I'm sure is a phenomenal car, to be honest. And we'll get to point A to point B, no problem.
Yeah.
But it will start to rival that, and you'll never have to maintain it, and you'll never have to care for it.
And it'll be safe.
And you'll never have to worry about it breaking down, and it's going to be safer than you driving because it has all the eyes around it, and you never have to park it, you never have to charge it. You'll pay, 70, 60 cents per mile at cost if you own it. You probably start, paying $1 per mile to actually use it, or even more, potentially $2 or more for the next 12 to 18 months until the whole thing ramps and they have, millions of robotaxis everywhere in the next few years. And then the cost per mile really plummets once the Cybercab is out and all that stuff at 20 cents per mile, starts getting crazy. But then the thesis becomes a reality. The broader market will start to price that in. And potentially, this is what we're starting to see, potentially. But if you're a follower of the company, an investor, a fan, or whatever, this is the moment that everybody has been waiting for. But it's very important to also set the...
I would have to definitely agree with Farzad. I remember when I first got V10 in the car. I think that was back in 2022-ish. 2021, 2022. When I got V10 in the car, it was, oh my goodness, it was a scary moment with pixelated screens and everything. It was definitely, from where they came when that first V10, when I got it, to now V13, and then probably going to be V14 in September, end of September. It's just going to be, the progress of acceleration is going to be awesome. And I think that they are going to pave the way for this, and it's just going to leave everybody in the dust, and Legacy Auto does not stand a chance.
Expectation that says hiccups will happen.
Yes,
accidents are unavoidable.
Yes,
regulators stepping in, probably avoidable, especially in very strict states. Labor displacement, if this thing goes live and it goes up without a hiccup and it just eats the market, you're going to have millions of displaced drivers in the next 1 to 5 years. What is that going to do to the economy? What is that going to do to the general well-being of people? Is the economy suited to absorb that labor loss in driving? Is Tesla going to get attacked because here comes Elon stealing your jobs, and all these rich people are getting richer because they can invest in AI stocks, right? What does that mean for the brand? What does that mean for the vehicles? This is a very complex situation, you guys. This is a gigantic disruption to transportation, and it doesn't.
And I totally agree with Farzad. Are we prepared for it? No. Are other people prepared for it? No. I'm prepared for it. I'm just, as I said, this is just one step in my business plan. The goal is to get 2 more cars by the end of September before that tax credit goes away. Once that tax credit goes away, it's going to be a lot harder for people to try to afford these cars. It will go up $7,500 in that sense, right? When the EV tax credit goes away. So what are people going to do after this? Especially in the Bay Area. I mean, if you can have, well, wait times, I think, is going to be massive, right? Because there's so many people in the Bay Area, and if you only have 100 or 200 cars to service that area, could it work? Yeah, it could. And if it goes success, it's down. It's just a copy and paste to every other city and state around the country on this. So it's just going to get nuts.
Come without its risks. It doesn't come without its hiccups. If you've been following the company, you know this entire story is filled with landmines, left and right, and forward and backwards, and above you and below you. All right? Because it's so disruptive. But the real idea here is that a true self-driving platform that is pennies on the dollar long term will massively increase the access for people to get around. and do so safely. That is the core thesis of robotaxi long term, and that is the reason why it will succeed, is if it can give people the ability to go from one point to another at a very low price, incredibly safely and reliably, to where they no longer have to spend money on a road missile that could potentially leave them dead. 40,000 deaths per year in the United States, something like 1 million injuries. Half of those 40,000 deaths are distracted or drunk driving, okay? That is the core thesis here. And then the flip side is, you're taking away my right to drive. You just, a machine has taken my job. What if I'm in the car and, I do something illegal, all of a sudden the cameras are gonna flag the cops and they're gonna come get me in the car, I won't be able to get to my point, okay? These are the next generation conversations we're gonna have to go through and figure out, because a lot of these are honestly valid. They're valid. Like, so we have self-driving cars everywhere. What does that mean? What does that mean for society? Does that mean automatically we have to give up some sort of freedom? I don't think so, right? But is it good for saving lives? Obviously. Is it good for allowing people to get around more cheaply? Obviously, right? So as anything in life, you have pros and cons, and we have to figure out, okay, how do we keep as much of the pros rather, and mitigate the cons? And that is the real conversation for the next 1 to 5 years. Not, is Tesla gonna figure out how to do robotaxi? Of course they are, obviously. Obviously, you guys, just come to Austin and take a ride. Just come to Austin and take a ride. Once they open it up, you all can come and check it out. So anyway, it's pretty amazing. And this Cybertruck is driving me around right now, and it has been driving me the whole time, and it drives me every freaking day. We have a Model Y with hardware 3 that's been driving us every freaking day. When I get a Turo for a Model 3 with hardware 4, it drove me around St. Pete freaking everywhere. Same thing in California when I got a Model Y with FSD, okay? These are incredible technologies. And
I mean, I'm in the same boat. My Cyber Beast drives me everywhere, right? The Foundation series that I got. The other Model Ys that I have drive me everywhere. I really don't drive anymore. Why? It frees up my mind of thinking to do more thinking, to figure out things just going on in life, period. And it's just stress-free. And you can't complain about being stress-free.
And this allows me to do a video like this, where I can monitor the car, make sure it's driving safely, and I can just dump my brain and create content. This would be impossible for me, specifically how my brain works, unless I had FSD in the car.
Exactly.
Right? And what's even cooler is that now this truck can turn into a studio for my business, right? And I can make it look sick any way I want. And that's why I freaking had it wrapped with G from Test Bros. He did an incredible job. And he's got this wraps for Model Ys and Model 3s, do-it-yourself kits, these DIY kits. He also has a shop in Chattanooga you can go check out and get your Tesla wrapped as well. He's looking to introduce more cars as well.
So yeah. So I mean, it's definitely happened pretty quickly. So there is a couple more updates for this. Let's see if I can find it. So now we're gonna go here.
We have several major updates from Elon Musk about Tesla's robotaxi service. And I mean major. First, Elon announced that the FSD release in 6 weeks, which will gain 10x higher parameter count, will be called FSD 14. He also said that robotaxi will be open access next month, no longer just invite only. This likely means lots more vehicles. The Austin robotaxi build, he said, is 6 months more advanced than what is available to the general public right now, and will substantially reduce the need for driver attention. Second, Tesla has now secured the rideshare permit for Tesla to operate a robotaxi service under the new regulations. Interestingly, it's a new LLC company, likely to limit liability. Third, if you want to buy a new Tesla to take advantage of the tax credit that is going away, you better do it soon. Delivery wait times have increased to 4 to 6 weeks. Finally, Elon went on a posting spree explaining a lot about Tesla's decision to shut down Dojo and converging instead to AI6. He also said most training in the future will actually be inference for the sole purpose of training. We'll review what all this means for us Tesla investors, and the best person to have today is Jeff Lutz, ex-CVP of Supply Chain and Chief Quality Officer, now CEO of his own supply chain consulting firm. Welcome, Jeff.
Hey, Herbert. Yeah, Mondays are great news days. It seems like just still so much happens over the weekend.
And the big ones. And this is all about Robotaxi. This is about Dojo. You're going to explain what happened and why it's actually not all bad news. It's actually good news in some cases. So we'll see. So let's get started with the big news. This guy, Keith Howes, asked the question. Honestly, every Elon post about Grok Imagine, he's been posting like crazy about Grok, while his customers driving a Tesla using FSD are being constantly nagged, is 1,000% cringe. Sincerely, the biggest Tesla bull there is. Elon replied to him, said the FSD release in about 6 weeks will be a dramatic gain with a 10x higher parameter count and many other improvements. It's going through training and testing now. Once we confirm real-world safety of FSD 14, which we think will be amazing, the car will nag you much less. Called it FSD 14. He reconfirmed the 10x parameter. It's going to be released in 6 weeks, and it's going to nag you much less. This guy said, if Robotaxi is working so great from videos, then why do you still need a special invite to get the app and try the service? Don't freak, I'm not trolling, just asking. Yeah, currently it is still invite only, and people are now asking, if it's so good, why are we still getting a special invite? Elon now said it will be open access next month. Wow, so the question everybody's now wondering is he referring to just Austin? Is he referring to California?
I think it's going to be
California.
California.
Both.
It's going to be the one.
What do you think about all this, Jeff?
Yeah, I think there's a merge happening in the background. At some point when you're doing software development, sometimes it makes sense to branch off. So there was a point in time, obviously,
thank you guys,
this year or late last year, where Tesla thought it made sense to branch off and get something ready for Robotaxi in Austin and now being used in the Bay Area. And what I see Tesla doing here both is converging in the background, but also it looks like, they're going to this newer model, much higher parameter count in the vehicles. It looks like they figured out a way to squeeze more out of AI4 reliably in the vehicle. And it looks like, to me, by the end of this year, they're trying to merge these two things together. So there's the release in our vehicles and the release being used for ride hailing are a merged entity. And that's easier for them. It's easier for them to maintain, and it gives them the best, cleanest data set. So we're taking a big leap, and this higher parameter count means, you just think of it as just greater resolution on anything that you turn the dial on in your home, or anything you use in your daily life. And with that greater resolution, the car should act smoother. It should respond more smoothly. It should just be more natural and human-like. So that's what's coming, and this is what autonomous driving is supposed to be like. It's not supposed to feel like a computer is driving you, but you want the safety, the reliability, the repeatability, the reproducibility of a computer, because they don't get sleepy, they don't get intoxicated, they don't get distracted. It's always on. Those 8 eyes are always on the road, and it's constantly processing. But now what you want that computer to act like is you want it to act very smooth. You want it to act like vehicles you would be driving it. I think that's what's coming here.
Jeff, how many, in order for this to be open access next month, did you interpret that to mean Austin? Did you mean California? And then if it is Austin, 80 square miles, don't they need, how many cars would you expect, right? Right now they have 12. Open access, you would probably need 100. What's your thought?
Yeah, if I'm Tesla, I have a plan in front. First off, they have a dashboard in front of them that is telling them that they can go to open access. So they're looking at they're looking at intervention data. They're looking at all kinds of data sets that tell them that it's safe for them to go to open access. So remember, Tesla's been doing everything safety first. They were getting mocked at and ridiculed of, oh, this is this or this is that. There's a safety driver in there. Meanwhile, they're just making progress in the background. So number one, Tesla has an internal dashboard they look at. They look at this data and say, okay, this is ready to go open access based on the amount of interventions. I think it's going to be Austin. And I think, if I'm Tesla, I've got this ramp plan of vehicles in front of me, and I'm just going to be layering in new vehicles every day between now and the end of September. It's not going to be some event where it goes open access and there's 100 more cars. Mm-hmm. I think they'll add 10, 5, 10, 15, 20, and probably just ramp that up over time. And again, they have all the data. So they'll look at the wait times. They'll look at the average wait time and they'll figure out, okay, I need to add more cars to the network. And the great thing here is, guess what? The factory's in Austin. Guess what? They make a car every 30 seconds. Guess what? These are production vehicles that come off the line. So this is what they've been building towards for the last decade. I don't know why people shouldn't be surprised. These are all platform level decisions that they've been building for over the last decade. That robot you saw cleaning the vehicles, that's probably ramping up in the background as well in terms of the manufacturing of that robot and dialing that in for cleaning vehicles. Think of the charging network that they've installed over the last 10 to 15 years. Think about all the service centers that are not only in the Texas, Austin area, but think about all of them that are all over the country.
Yep.
So if there's any company that's ready to truly scale and already has these assets, many of these assets are depreciated to a great extent, and they're there and they're ready to host a robotaxi network. It's Tesla.
Mm-hmm. The app, I can go on and on. Insurance, they've rethought a lot of things,
right.
But the speed by which this is growing, is improving and expanding, is right in line with what we were all expecting, right? It's only been 2 months. And now he's saying that next month we're going to get a new version, plus we're going to get open access. It's going to expand further. Knock on wood, things are looking good. So there's more things that Elon said here. James Dalma, great expert that we are so fortunate to have in our community. He said, FSD road trip log, day 8. He's been going all over the country. Drove from Milwaukee to Chicago, lots of side roads, and picked up 16 new superchargers, now at 1,117 total. What? No interventions. He calls his car Annabella. Annabella continues to amaze in the city traffic and surrounding areas. Great weather. Watch the full moon rise over the city from rooftop deck. He's just unbelievable how he's been driving all over the U.S., driving on FSD forever, and it's been perfect for him for so long. Elon replied to him, said the FSD software update next month will be a major step change improvement for rare conditions. CERN asked, could this be the version that allows the safety monitors to come out? And Elon replied to him, this will substantially reduce the need for driver attention, but some complex intersections, heavy weather, or unusual events will still require attention. Note, the Austin Robotaxi FSD build is 6 months more advanced than what is available in cars in America, and there's some additional breakthroughs in Tesla AI that will make the car feel eerily human. This is what you're talking about. Just earlier, you said that there's 2 builds and they're going to merge them, so eventually we'll get this. And it's like 6 months more advanced. But he didn't really answer the question directly, right? It's like, someone asked, is this the safety monitor to come out? Will substantially reduce the need for driver attention. So do you think that the safety monitor will come out, but then they'll have remote drivers just to watch out for those complex intersections, heavy weather, unusual events?
They will.
Yeah, the car needs to be smart enough to avoid those situations, and basically, put a box around events that could be of higher risk and avoid them, or you still need driver attention, because right now what's happening, as you see other robotaxi services scaling, you're seeing more and more events being posted of accidents. You're seeing them, or they're driving into construction.
And I kind of agree. Once one accident happens and it's major, it's just going to make headline worldwide news on Tesla's robotaxi got into a major accident. They're automatically going to blame the robotaxi car first. It's going to be very sad for that to happen. Instead of saying, hey, robotaxi and another car collided, still being investigated. Once we know about the investigation on what happened, we will send that information over to you quickly, but it's not going to happen that way at all.
Areas and so forth. Yeah. So as these scale, these are the things you have to look out for. So Tesla understands this. Tesla understands the probability. They know how their software is performing. They know how their computer is performing. They know the probability of an error. They know the probability of a and just because you have an error doesn't mean it's serious. So you have the priority 0, the serious one, safety critical, and then you have non-safety critical. They have all the stats behind this. This to me determined the number of vehicles that were put out in each locale, and they will ramp that up as they bring that error rate down. You bring the error rate down, you need less intervention. I don't know why people are getting so fixated. They could have hundreds or thousands of potentially of these safety drivers if they need it. It's not desirable. I do think they're going to be able to pull back on that over time, but it's all going to be data dependent and data driven. It's not a permanent solution. In the Bay Area, they've got to accumulate miles, and they've got to present their data. So that's what's happening in the Bay Area. In Austin, I think it will come out. I think it will come out first. It's just going to be a question of how they see the data, and they just. This is the thing: is they're still in the early days of this. Even throughout the rest of this entire year, they're still in the early days of it. It's going really well. You can take all the criticism and you can put it in the corner, and then you can take the other 85-90% of the commentary, and it's all like, this thing works really well. The bloggers are going through it. The professional YouTube bloggers are going through it. They're like, this works really well. Mm-hmm. So keep accumulating positive sentiment behind what you're building. This is part of the approach to a new product launch. It's especially a safety critical product.
Yes,
and this is when I see the criticism on X of, oh, it's still this.
Yeah.
These people have never launched a safety critical product before. You can criticize. It's a free. You can say whatever you want, but what Tesla is doing is the right approach. It's a calibrated approach, and
agreed.
To me, if I'm them, is I keep the safety drivers in as long as I need to, and I put some guard band around it, and I keep them in maybe even longer than I think is necessary, and I only pull them out when I've got a probability of serious incident that's significantly lower, way lower than even 10 times better than human driving right now. I would continue to progress it and improve it. So I think they want to see the output of this new release and how it's performing.
Mm-hmm. That's a fantastic call out. Good reminder. It's Tesla is data driven, and not only are they data driven, they've got the computers, they've got everything.
Tesla lives off their data. They don't live off speculation. They don't taking guesses. They don't live off of what media is saying or what influencer is saying. They're not concerned about that outside world noise. They are concerned about their in-house data that they have a massive amount. It's ridiculous on how much data they have, from their factories to how many miles have been driven in the car, what they're doing in the car. There's a whole bunch of just data, just like your phone, massive amounts.
They've been tracking this data like crazy for years, as we've been doing supervised FSD, but even more so now. And so because they're data driven, this announcement by Elon saying that we're going to pull out, we're going to do open access, we're going to expand all those things, we're going to introduce the new software that's even better. That means it's good. That means it's headed in the right direction, as opposed to, trying to be more, saying things that are like, we're going to delay things. It won't be happening for 6 months. Sounds like it's going to move forward. That's fantastic.
Quickly.
You had a comment about pricing. Yeah, because obviously, we're starting to see more and more comparisons between Tesla's Robotaxi against Uber, Waymo, and Lyft. Here's one person who tested it out. Robotaxi at $3.84 to go as $2 to 82 miles, and was a 5-minute wait. Uber is, I don't know what that is, 3 times more. Waymo is like even 5 times more, 6 times more, and then there's 3 times more. And of course, it depends on what kind of ride you're picking, and so forth. But in general, and you're saying this is just getting started, not anywhere near scare Tesla pricing. So this is the comparison. Yeah. And this is being compared. This is a 1.36 mile route. So of course, it depends on time of day, depends on route size. But in general, Robotaxi is cheaper.
Yeah. This is a complex topic, and this is breaking some brains for sure.
I agree.
Because if you're anti-Tesla, you think, well, everything here is just subsidized. This isn't real, and this isn't going to be how it's going to be when it's launched. And if you're practically thinking, if you follow the company for a long time, there's a couple of things that are true. And if you're connected to building any kind of product in reality, a couple of things can be true. One is 2 things can be true at the same time. So Tesla could be margin neutral, they could be losing money, but they're setting the pricing for a certain reason. And if I'm Tesla, like, why would I release a Model 3 or a Model Y at a certain price point only, to raise it, 10, 15, 20, 30%, a couple months later, well, there would have to be some sort of event. There have to be some sort of market condition that would dictate that I do that. The fact that the pricing is where it is right now, I believe it's for a reason. And what companies look at is they look at their launch economics, which are typically negative, especially when you have a new product line, new platform. You have all kinds of expense lined up for launch that you're dealing with. It's typically negative for some period of time. And for Tesla on the Robotaxi network, it could be negative for a while. I think people should just get over that. Everything in business, though, is about your ability to scale profitably and your time to break even, and then your time to volume. These are things that are measured by people that are very serious about doing product management and business plans on a product line. They look at the point in time of how long does it take to get to break even, how long does it take you to get to your peak volume point of what you wanted to achieve for your economics, and then you're looking at your full plan, your lifetime economics. So there's launch economics, lifetime economics. So I don't believe Tesla's setting this pricing just for giggles. I believe that they're setting the pricing in an area that they think that they can achieve at scale. Whether it's they're losing some amount of money, they probably are, right? Again, any new product, new platform at the early period of launch is typically negative. But I believe they're setting it here for a reason, because I think they believe that as they've modeled the lifetime economics of this, they can achieve this and maybe better. Now, one other thing to keep in mind is ride-hail economics there are market drivers to things like this. For example, if there's the Super Bowl's happening and there's 100,000 people leaving a stadium, well, that's going to change the demand on versus the number of vehicles and that can be in that physical area. So prices will probably go up. But I think what you're going to continue to see is this.
Yes, it's just common sense with this, right? Prices are going to fluctuate, but they're not going to fluctuate a lot because of the surge pricing. Now, the surge pricing that Uber does is absolutely crazy ridiculous. If you've ever been into a surge with a major event happening, i.e. concert, sporting event, etc., they can charge a lot because of the surge of what the demand is. But also they're paying for a human driver. That's the reason why. So even if there is a slightly raised price with Tesla's Robotaxi network, you won't get that big surge price that is from having a human being behind the wheel in this in that service.
Fairly significant gap between these poorly designed systems. Okay. And by the way, these aren't like massively profitable companies we're talking about, or massively profitable business units that they're competing against. But if the underlying system design and their total unit economics, and they're in their lifetime phase, some of them are at their phase of like, okay, these are economics based on how we designed our system. I think you're going to see this gap persist. I don't think you're going to see this level out. But again, they could all go up, and maybe some can come down over time. But I think you're going to continue to see this significant gap between Tesla and the others based on how Tesla designed their system design for their offering, from the base layer of silicon all the way to how the vehicle is cleaned and charged.
Yep.
I learned a few things, Jeff. Yeah. Launch economics, lifetime economics, pricing for giggles. Good job. You're very good.
Yeah.
Very, very good. Okay. So a few more things we got to cover here. It's just quite a number of things. So first, Tesla did secure a new Texas rideshare permit because they've just changed the new laws for September 1st. And good thing, Tesla got it. So they're now granted a rideshare license in Texas, paving the way to operate Robotaxi service under the new regulations. Then, interestingly, Tesla Robotaxi LLC is now listed as a transportation network, joining others, including Uber and Lyft. The license recently became necessary under new state law. The new policy adds additional permitting, oversight, and requirements for operators of autonomous vehicles. Currently, autonomous vehicles in Texas must be equipped with cameras, insurance, and be able to follow traffic laws. Okay, so that's good news. And then Alexandra asked the question, why set up a separate LLC? And JC Christopher worked at one of the big four companies, accounting firm, said Texas has a Series LLC option for companies where distinct separate assets are insulated from the others. Obviously passed through with no extra taxation, especially in Texas with no state law. So most folks use LLCs in Texas if they're able to do it. It makes sense, right? They're going to have a Texas LLC, they're going to have a California LLC, and every place will have it so that if there is a lawsuit, it's contained, limits your liability. But it's just things that we were expecting, and now we're seeing it happening. And then finally, just to share this, NHTSA actually reached out to Tesla on July 1st. So that's, July, August, a couple months ago. And they wanted to test this robotaxi service. We've not heard anything from them. So it's just normal that NHTSA wants to test out the service. So I don't think this means anything, but it's actually a good thing.
Yeah, as long as
just a message, I think, to the Tesla community. Let Tesla get permitted. Let them pass these regulatory requirements. Stop egging on this, pull the safety drivers out. When are they coming out tomorrow? Let them get permitted. Let them get approvals from these local geographies. Let everything settle. Let it scale up naturally. Don't rush these things is my advice. And just know that they've got the data set that they're looking at, and they'll know when to make the right decision. Even though it feels great for the couple of rides that we're taking, I trust their ability to look at this data and make the number one priority is do not hurt anybody. Yeah. Number two priority is provide a great service at a great cost structure. Those priorities should never get mixed up, and they got to get all these permits under their belt. They got to get them.
Agreed.
Yeah, and the impatience is funny because it's only been 60 days, so it's not like we've been waiting forever. We've been waiting for it to finally get here, and so now
we don't want to scale this up way too quickly. It's totally natural to move at a slow snail pace and grab data, and to continue to grab data, then they can make a decision on what they want to do next. This should not be rolled out quickly. I am not for that at all. Not for that, to run it out quickly. Take your time.
They're like, come on. All right. So some important things, of course, is that the tax credit is going away by September 30th. But what's important for everybody to understand is you need to have received delivery of the vehicle before September 30th. Not you can't just order the car a week before and think that you're going to get the $7,500 tax credit. And Tesla's already warning everybody. They're seeing sales through the roof to the point that delivery to wait times now is 4 to 6 weeks. So this is no longer just 1 to 3 weeks. This is, you need to act today, basically, if you want this. The 6-seat Model Y L has entered mass production. This is, I guess, a rumor, but these are coming from China. And I think in China, it seems to be like the media there is reporting things that seem to be more accurate than not. So we can expect Model Y L showcases in stores in China. And then this was found by Green, the software. Green the Only he digs into the software. He's discovered that in the software update for Model S and X that has AMD, there's this game engine level. So eventually, this is what you're going to see in your car, not this cartoon thing. It's going to look so real. Like if it's so real, you're going to know, where am I looking, here or just look straight at the reality? Anyways, things are improving fast.
With that type
a number of things happening there. First, with the tax credit expiring. I don't know if people realize what's happening here. These things are hard to time when you're a big company and you're making these, $30,000 plus products with 10,000 parts. But what I see Tesla doing is you have the $7,500 credit out there. It's clearly in the United States been somewhat of a demand driver. I think it gets overstated a bit, because you have to qualify for this thing. And you have to be willing to spend $50,000 for a car. So the income requirements and the qualifications are interesting. I think it's been driving the lease rates up. But here's the bigger point. I think Tesla is in the background working on a reduced cost vehicle, whether that's a compact Model Y, whether it's the existing size Model Y with some price reductions. I think it's probably going to be both, to be honest with you. If you're Tesla, there's no reason why you would not continue to cost reduce the base Model Y. It doesn't mean that everything that comes out needs to be visible to consumers. They could do that Model 3 Mexico version where they put the cloth seats and some other things, but I think we get over fixated on that stuff, to be honest with you. But it's possible that they'll cost reduce that version, and they may make that the base version. We'll see, and then maybe there'll be a base and a moderate or premium version. I do think they'll make a compact version. You want to reduce parts. You want to reduce the size and mass of parts. You want to reduce the amount of consumables, the weight, and the total volume of consumables that are made. This is all cost that comes out. But I think what's happening in the background is these modules that are supposed to go in the Cybercab, that will go in the Cybercab, I should say. Think new motors, new battery pack, new inverters,
new hardware.
These are the things, quote unquote, under the hood that we don't see as consumers. We press the accelerator and the car goes. Whether the electric motor is $1,600 to make or $950 to make, we don't know. We just know Tesla's engineering a new electric motor at a lower price point that still performs really well. That $700 change per motor is going to be transparent to us. But I believe that those changes, those things from the next generation platform, and they told us that they're doing this, but this just continues to get ignored by the community. That to me could be a several $1,000 cost reduction that will occur in the vehicle for many things that you don't see as consumers. So why am I saying all this? $7,500 credit goes away. By the way, what has Tesla been doing the last year? They've been buying down interest rates. They've been buying them down from 6 to 8% all the way down to 0 to 3%. They've been buying them down. What is that doing? Tesla's accruing that. It's costing them $5,000 to $7,000 per vehicle they're selling. For most of the vehicles they're selling that they do this on, it's costing them that money. So whether there's the $7,500 credit or Tesla buying down rates, I do think we're approaching the following scenario. One is Tesla will have lower cost vehicles out that are lower for them to produce, and they can price them lower. So that's going to eat a few $1,000s into the $7,500 gap. But the nice thing, it's going to be for the world, not just for the U.S. The second thing is interest rates are going to start coming down. Whether it's 2 interest rate cuts or 3 interest rate cuts this year, it's going to start coming down.
I think is the first,
and that's going to help. That's going to hopefully, as long as the bond markets respond favorably, interest rates should start coming down for loans. So Tesla would have less of that to buy down. And so I think there's a confluence of Tesla building a lower cost vehicle, interest rates coming down, and I think those two things together are going to eat into this big concern of there's going to be this massive demand cliff when the $7,500 credit goes away. I think Tesla's eating into most of that, and whether they had to spend $5,000 to $7,000 to buy down rates, or I think that total nut that Tesla had to deal with is going to be a much smaller number to drive demand on this tier of product. And again, now you're going to have FSD 14 running on top of these vehicles, and I think when you put that whole thing together, I don't think any of us, including Tesla, actually really know what the demand picture is going to really look like when all of that is running together. But it's not going to be $7,500 credit goes away and Tesla has no plan. Tesla has a plan.
They've already accommodated for that.
I'm glad you threw in the FSD at the last bit. I was going to jump in and say, you forgot about FSD.
You forgot about it.
Yeah, there might be a way that Tesla could, that's pure margin for Tesla. If they can convince people more because it's FSD 14 to buy it, then that can be a way that they can reduce that price or bundle it in or keep it, but keep their margins even though the price is high. We'll see what they do. But they got so many levers, as you pointed out.
And I keep going back to it. There's a value proposition for FSD and insurance. I mean, you were the first to discover that.
Just quickly, Jeff in Chicago has Tesla insurance, and he discovered that as you drove it with more FSD time, the insurance went down, and then that's been confirmed.
Let the car drive itself and get its driving score to 100 to 98 to
and
100.
Your Tesla insurance
and my down. Insurance is roughly half of what it is on the market.
It's crazy.
It's just that example.
big topic is Dojo. Hard to know what actually happened, but people are thinking that, first of all, Bloomberg reported that the Dojo team is disbanded. They also reported that there's 20 Tesla executives who left the Dojo team and formed their own company. So at first it sounded like this is a major blow to Tesla and so forth. Elon responded, and he spent the entire weekend giving more information. But at the end of the day, I've got 2 videos from Jensen Huang from last year that I'm going to play, because you're going to now learn that maybe, as always, Elon is actually thinking far ahead, more though than most, and this is not a big hit or not. We'll see. So first of all, Bloomberg reported Tesla's winding down efforts with Dojo. They're instead focusing their compute needs on NVIDIA, AMD, and Samsung. Pete Bannon, who's the vice president that was in charge of the Dojo team, is now leaving Tesla. And then most of the Dojo team began to leave. Amit said, not really a big deal. Most of the Tesla bull case has been rooted in FSD, not Dojo. This deepens the moat on NVIDIA, just easier to buy their chips versus replace them. Elon replied to him, says it doesn't make sense for Tesla to divide its resources and scale 2 quite different AI chip designs, right? You got the AI5, AI6 series, then you got Dojo. The Tesla AI5, AI6, and subsequent chips will be excellent for inference, and at least pretty good for training.
I say he's
all efforts focus on that. And this is the videos I'll show you later here. Jensen Huang mentioned that inference and training are actually merging into one. He said this last year, and that inference is going to be the one that is 1 billion times bigger, and that's what the focus should be. So actually doing this move by Elon, whether or not he was forced to do it because these guys left, or whether or not he actually was the one that said, you know what, I don't know why we're doing Dojo. Phil Bissell said AI6 is now Dojo. When Elon disclosed plans for the AI6 chip, remarking it would be the convergence architecture, it was clear major changes were coming to Dojo. Dojo's Tesla's AI training supercomputer, built around a custom chip known as the D1. But the D1 and AI5 and AI6 share many core design elements. In a sense, Dojo will live on as a generalized AI6. Going forward, all efforts will focus on AI6. Elon replied to him, once it became clear that all paths converged to AI6, I had to shut down Dojo and make some tough personnel choices. Dojo 2 was now an evolutionary dead end. Dojo 3 arguably lives in the form of a larger number of AI6 systems on a chips on a single board. So if you read what he just said here, if you believe what he said, he's saying he shut down Dojo. He made the tough personnel choices, not that they left. And then he basically realized, like, why am I doing Dojo 2 training when everything points to AI6? What's your take on all that, Jeff?
Well, I would listen to Elon here. It's strange. The commentary on X it boggles the mind. First off, again, it's a free speech platform. People should be able to voice their opinions.
And then here's Jensen
of 2024. Listen to what he says. It's very interesting.
There have been some recent stories that NVIDIA will face more competition in the inference market than it has in the training market. But what you're saying is it's actually going to be one market, I think. Can you comment about, is there going to be a separate training chip market and inference chip market? Or it sounds like you're going to be continuously training and switching to inference, maybe within one chip. I don't know. Why don't you explain some more?
Today, whenever you prompt an AI, it could be ChatGPT, or it could be Copilot, or it could be if you're using a ServiceNow platform, if you're using Midjourney, using Firefly from Adobe. Whenever you're prompting, it's doing inference. Inference is so it's generating information for you. Whenever you do that, what's behind it, 100% of them, is NVIDIA's GPUs. And so NVIDIA's, most of the time you engage our platforms are when you're inferencing. And so 100% of the world's inferencing today is NVIDIA. Now, is inferencing hard or easy? A lot of people, the reason why people are picking on inference is when you look at training and you look at NVIDIA's system doing training, when you just look at it, you go, that looks too hard. I'm not going to go do that. I'm a chip company. That doesn't look like a chip. And so there's a natural, and you have to, in order for you to even prove that something works or not, you're $2 billion into it.
Yeah.
And you turn it on to realize it's not very effective, you're $2 billion and 2 years into it. The risk of exploring something new is too high for the customers, and so a lot of competitors tend to say, you know, we're not into training, we're into inference. Inference is incredibly hard. Let's think about it for a second. The response time of inference has to be really high, but this is the easy part. That's the computer science part. The hard part of inference is the goal of somebody who's doing inference is to engage a lot more users, to apply that software to a large installed base. Inference is an installed base problem. This is no different than somebody who's writing an application on an iPhone. The reason why they do so is because iPhone has such a large install base. Almost everyone has one. And so if you wrote an application for that phone, it's going to have the benefit of, it's going to be able to benefit everybody. Well, in the case of NVIDIA, our accelerated computing platform is the only accelerated computing platform that's literally everywhere. And because we've been working on it for so long, if you wrote an application for inference, and you take that model and you deploy it on NVIDIA's architecture, it literally runs everywhere. And so you can touch everybody, you can enable, have greater impact. And so the problem with inference is actually installed base.
Your revenue today is inference. But inference is about ready because of chain of reasoning.
Yeah.
Right? It's about
to go up by 1 billion times.
Right, by a million X, by a billion X.
That's right. That's the part that most people haven't completely internalized. This is that industry we were talking about, Bud. Right. This is the Industrial Revolution.
Right.
Yep, this is our Industrial Revolution.
Wow. Okay, so you see that he also was saying that inference is, first of all, installed base. Guess who has the most installed base? Tesla has all the cars. We'll have all the robots. They have inference chips. Then he talked about that INT1.
Yes, this is the Industrial Revolution of our time. AI. That is the Industrial Revolution of our time. And it's just going to get absolutely bazonkers. It's going to get crazy fast. People are not expecting this. So I keep trying to tell people this, trying to give them warnings in my small little platform that I have.
Market. And then he then said that it's going to be 1 billion times, a million to 1 billion times larger than the training market. So for Tesla to say, hey, we're going to merge everything to the AI6 chip, that's going to be our new market. That's a great thing. You've got...
Yeah, so I just want to give you guys just a little bit of what was going on with some things. So it was just a short little live stream. Obviously, I got to get ready for work, but the longer streams will be on Thursdays, Fridays, and Saturdays at nights, just because I've altered my schedule in order for to go over things for the week, which is great. So just giving everybody a heads up. Everybody have a good day. Thank you. And we'll watch more videos tomorrow shortly like this again. All right, guys.